Do you feel safe keeping all your money in the bank in 2025? Let's look back at one of the most shocking recent events. A leading bank in Silicon Valley, once considered the heart of America's financial and tech sectors, collapsed within just a few hours. Countless clients, including major startups, woke up one morning only to find they no longer had access to the funds they had entrusted to the bank. It felt like a scene from a movie, but it was a real-life nightmare. What if I told you that keeping all your assets in the bank might be one of the biggest financial mistakes of our time? Would you believe it? The truth is, while you may feel confident that your money is safe within the banking system, that money is quietly losing value every single day. Inflation slowly erodes your purchasing power. Political and global economic decisions, completely beyond your control, can directly impact your account balance. And if you're counting on the bank to grow your wealth, think again. Today's savings interest rates are sometimes even lower than parking fees in some major cities. We grow up believing that the current financial system is solid, that banks are the safest place to store our wealth. But perhaps it's time to ask, is that belief still valid in a world full of uncertainty? When what was once considered secure shows signs of fragility, the greatest danger may not be financial risk, but complacency. Today, I invite you to explore 7 types of assets, widely regarded as safer and smarter alternatives to simply leaving your money in the bank, where its value is slowly eroded by time and inflation. Each asset on this list plays a strategic role in protecting your finances. Some help preserve and grow your purchasing power against inflation. Others generate steady passive income, contributing to long-term financial stability. One, in particular, is often labeled as risky, yet it has helped many people significantly grow their wealth, provided they understand how to use it wisely. The final asset I'll share might be the most controversial but worth considering in uncertain times. It's not for everyone, but for those with an open mind and a clear risk management strategy. It could be a turning point in their financial journey. Before we dive into the list, I want to hear from you. Have you, or someone you know, ever experienced financial difficulty related to the banking system? Maybe it was the 2008 financial crisis, or the recent shock when several major banks suddenly froze customer accounts overnight. Please share your story in the comments below. These real-life experiences aren't just personal. They can be valuable lessons for others. Your voice could be the wake-up call someone needs to avoid financial loss in the future. Before we break down each of these smarter asset classes, let's take a closer look at today's economic landscape to understand why this conversation is more urgent than ever. In the United States, inflation continues to hover around 2.8% annually. That number might not sound alarming at first glance, but think of it this way. If you leave $100,000 sitting idle in a bank account, after just 1 year, its real value will have silently dropped by nearly $3,000, simply because the cost of living, goods, and services continues to rise. That's the hidden price of so-called safety. At the same time, the base interest rate remains high, above 4.25%. This doesn't just make borrowing more expensive and squeezes businesses, slows economic growth, and creates instability across financial markets. As a result, traditional investment channels have become increasingly limited in their ability to generate meaningful returns. More concerning is the mounting pressure on banks, even the largest and most established institutions. They're struggling under liquidity crises, shaky investment portfolios, and, most dangerously, a growing loss of public trust. Remember, Silicon Valley Bank, once a go-to institution for thousands of major tech companies, collapsed in less than 48 hours. No warning, no time for clients to react. Just gone. Adding to this, new import tax policies have recently been introduced, raising concerns that inflation could surge again, driving up the cost of goods and further thinning consumers' purchasing power. In such a climate, it's worth asking yourself, what is your money doing in the bank right now? It's losing value day by day, silently and irreversibly. It's earning little to no return, with interest rates on savings far below the inflation rate. And most importantly, it's still vulnerable to systemic risks, as collapses can happen anytime, without warning. That's why today, we'll dive deep into strategies and asset types that can help you preserve your wealth, generate income, and reduce real risk. The kind of protection and opportunity that even the most reputable bank account simply can't offer. Asset number 1. Gold, a fortress for wealth across all eras. As the world enters a period of heightened uncertainty and trust in the traditional financial system continues to erode, gold again reaffirms its status as the ultimate haven for personal wealth. Unlike fiat currencies, which can be printed endlessly by central banks, gold is a finite natural resource, which helps it retain its intrinsic value over time. Governments do not control it, nor does it depend on banks or any financial institution. This is exactly why, for thousands of years, civilizations across the globe, from ancient Egypt and Rome to imperial China, have revered gold as a symbol of wealth and power. Fast forward to 2025, and the price of gold has surged past $3,000 per ounce, clearly reflecting a global sense of unease. Prolonged geopolitical conflicts, looming fears of another financial crisis, and fading confidence in national currencies. Even central banks around the world are quietly increasing their gold reserves, treating it as a protective shield for their own monetary systems. If you're considering owning gold, there are two main options. Physical gold, gold bars or coins which can be securely stored at home or in specialized vaults. Financial gold, investments in gold ETFs such as GLD, a more flexible and convenient way for those who prefer liquidity and don't want to manage storage concerns. No matter which form you choose, remember this: gold is not about quick profits or speculation. It's about preserving the wealth you've worked hard to build, shielding it from inflation, financial turmoil, and the unpredictable tides of global change. Asset number 2. Government bonds, a safe haven for conservative capital. If you value stability and prefer not to play the odds in a volatile market, government bonds are one of the smartest and most reliable options. At its core, investing in government bonds is like lending money to the government. In return, you receive regular interest payments and a guaranteed principal return at maturity. In particular, U.S. government bonds are widely regarded as one of the lowest-risk financial instruments in the world, thanks to the trust and creditworthiness of the largest economy on the planet. Currently, many U.S. Treasury bonds offer yields above 4% annually, far surpassing traditional bank savings rates, which often linger between 0.5% and 1.5%. In an environment where inflation remains a concern and financial markets are marked by unpredictability, bonds provide a practical way to preserve capital while generating steady, passive income. The best part: you don't need a large amount of money to get started. With as little as $100, you can purchase bonds directly through Treasury Direct, the official website of the U.S. Department of the Treasury. Alternatively, you can invest via trusted platforms like Fidelity, Vanguard, or Charles Schwab, all offering user-friendly access to government securities. In summary, government bonds aren't a get-rich-quick scheme, but they are ideal for those seeking security, long-term reliability, and transparency in managing their personal finances. Asset number 3. Your own business. A wealth-building asset you create yourself. In a world where everything can change overnight, from bank interest rates and government policies to overall market stability, owning your own business is one of the most powerful ways to regain control of your financial future. It doesn't have to be a massive corporation or a million-dollar startup. Even a small business born from your personal passion or skill set can become one of the most valuable assets you'll ever own. What makes this asset so unique? You don't rely on banks or financial institutions to generate returns. You create your income stream, so there is no need to wait for monthly interest payouts. Most importantly, you control your business's growth, direction, and scale. Today, thanks to technology and the rise of the digital economy, starting a business is more accessible than ever. You can begin with simple, low-cost models like opening an online store selling handmade products, food items, or niche goods. Create digital content on platforms like YouTube, TikTok, or launch a podcast about your expertise or interests. Write an ebook or launch an online course based on your professional knowledge. We offer freelance services in areas like graphic design, writing, marketing, and social media management. These ventures often come with low startup costs and manageable risks. And, most importantly, they give you full control over your success. Many successful people started with nothing more than an idea and a strong commitment. Over time, what they built became not just a source of income, but a sustainable, income-generating asset that could even be passed down to future generations. So, if you're looking for an asset that can grow at your pace, on your terms, then building your own business might just be the most impactful financial move you'll ever make. Asset number 4. Cryptocurrency, the asset of the digital age. In a world increasingly driven by technology, cryptocurrency, especially Bitcoin, has emerged as a revolutionary alternative asset. Unlike traditional fiat currencies, which can be printed at will by central banks, Bitcoin is decentralized, transparent, and impossible to counterfeit. Thanks to the power of blockchain technology. What makes Bitcoin truly stand out are its unique advantages: exceptional long-term returns. Since its inception in 2009, Bitcoin has skyrocketed in value, outperforming nearly every traditional investment over the long term. 24/7 global liquidity. Unlike stock markets with limited trading hours, Bitcoin can be bought or sold anytime, anywhere, as long as you have an internet connection. Immunity to currency devaluation. Bitcoin's supply is capped at 21 million coins, making it resistant to inflation and immune to government manipulation or printing. It's not just individual investors who are paying attention anymore. Major corporations like Tesla, MicroStrategy, institutional funds, and governments like El Salvador have adopted Bitcoin as a form of digital gold, a hedge against systemic risk and global inflation. The good news? You don't need thousands of dollars to start. With just a few dollars, you can begin exploring crypto through trusted platforms such as Coinbase, Binance, or Kraken. Of course, high potential comes with high volatility, so it's crucial to educate yourself, manage your risks, and invest responsibly. Cryptocurrency is not just an investment. It's a statement of financial freedom in the digital era. And for those willing to learn, it may represent a game-changing opportunity to reshape their financial future. Asset number 5. Real estate, tangible value, and long-term sustainable returns. For decades, real estate has consistently ranked among the most trusted investment vehicles for protecting and growing wealth, even amid economic ups and downs. Unlike stocks or currencies that fluctuate wildly within hours, a piece of land, a home, or a rental property offers real, visible value, something you can touch, manage, and control. So why do investors love real estate? Here are 3 key reasons. Natural inflation protection. As the cost of living rises and currencies lose value, property values and rental income typically increase as well, helping to preserve your purchasing power over time. Steady, passive income. Renting out homes, apartments, office spaces, or commercial properties can generate consistent monthly cash flow, while the core asset retains, or even grows, in value. Strong long-term appreciation. History shows that real estate tends to appreciate over time, especially in growing areas. This offers the potential for dual profits, from ongoing rental income and capital gains if you sell the property later. You might think real estate requires a large amount of capital, but that's not necessarily true in today's world. With real estate investment trusts, REITs, like Realty Income, you can own fractional shares in large portfolios of income-generating properties, including shopping centers, office buildings, and residential complexes, with as little as a few dozen to a few $100s. Plus, many REITs offer monthly dividends, simulating the income of direct property ownership. In short, real estate remains a cornerstone of smart long-term portfolio strategy. Whether you value physical assets or prefer digital platforms' flexibility, real estate can serve as a solid financial shield, especially in an age of uncertainty. Asset number 6, physical cash. Freedom and control in your own hands. In today's digital era, we've increasingly relied on banking apps, e-wallets, and electronic transactions. But in times of crisis, an outdated asset suddenly becomes invaluable. Physical cash, real banknotes, safely stored where you have full control. Recent history has taught us powerful lessons from countries like Greece, Lebanon, and even right here in the United States. When the banking system faltered, people lined up at ATMs, only to discover they couldn't access their own money, or that the machines had run out of cash altogether. Their accounts still had balances, but were locked out of their funds. Those who held physical cash were truly free to act in those critical moments. Holding cash is not a strategy for earning returns. It's a crisis preparedness plan. It offers a vital buffer for unexpected situations. Widespread power outages, banking shutdowns, natural disasters, civil unrest, or any event that temporarily freezes the financial system. Ideally, you should keep enough cash on hand to cover 1 to 2 months' worth of essential living expenses, including food, fuel, medicine, and other necessities. Store it securely in a place that's safe and accessible, but not too obvious. It's also smart to break it into small denominations to ensure flexibility when making purchases during emergencies. While physical cash doesn't generate interest, it offers something even more valuable during uncertain times: peace of mind, readiness, and the power to act when others cannot. That kind of autonomy is a priceless asset in a world full of instability. Asset number 7, collectibles and luxury goods. Value rooted in uniqueness and aesthetic taste. Not all assets come in numbers, charts, or financial contracts. Some investments may seem like mere hobbies at first, but quietly increase in value over time due to scarcity, cultural relevance, and emotional appeal. These are collectibles and luxury goods. Think of vintage Rolex watches, classic cars in pristine condition, or rare artworks from renowned artists. These items are symbols of refined taste and highly sought-after assets, often held by wealthy and seasoned investors as a form of alternative wealth preservation. Here's what makes this asset class truly special: exclusivity. Many collectibles exist in limited quantities, sometimes as one-of-a-kind pieces. This uniqueness creates natural scarcity. Detached from traditional financial markets, their value is shaped not by market indexes, but by cultural, historical, and emotional significance, often dictated by those who understand and appreciate their story. Long-term appreciation potential. As rarity increases and demand among collectors or high-net-worth individuals grows, the price of these items can multiply significantly over years or even decades. Of course, investing in collectibles requires a certain level of knowledge and passion. Whether you're drawn to vintage cars, high-end timepieces, fine art, or aged wines. Success depends on your ability to understand the market, spot authenticity, and anticipate value. But for those who love the chase and embrace the learning curve, this asset class can be personally fulfilling and financially rewarding. In a world that's becoming more digital and intangible, these touchable, feelable assets still hold a special place, not just as investments, but as symbols of legacy, time, and timeless elegance. With that, we've explored 7 powerful asset classes smarter and safer than simply parking your money in the bank, and giving you a solid foundation for long-term financial resilience. Each one plays a unique role, from preserving value and generating passive income to expanding your personal freedom and building generational wealth. Now it's your turn. Which of these assets speaks to you the most? Is it gold, the timeless haven? Or maybe a small business where you generate your cash flow? Or perhaps Bitcoin, the digital asset redefining how the world sees value? Share your thoughts in the comments below. I read them. No matter where you are in your financial journey, just starting, uncertain, or already investing, this conversation might be the first step toward a more secure and intentional future. I look forward to walking that journey with you.